Okay, I think we're going to get started. We have almost about 300 people that have logged on, and I know we've set aside an hour for this. I want to welcome everybody to the CARES Act webinar hosted by Certified Financial Services and Cole Schotz. My name is Craig Feinberg. I'm one of the managing partners at Certified Financial Services, and we have Chris Kula and Marissa Mastrononi. I know I butchered your name. Sorry, Marissa. I tried. From Cole Schotz with us, and we're going to talk about, good. We're going to talk about the ever-evolving landscape of what is going on with the SBA loans, the CARE Act itself, the legislation, and we're really just doing this because for the last three decades plus, Certified Financial Services and NW Financial Group have worked together with Cole Schotz to serve the community, and we have literally thousands and thousands of clients between the two of us, and we've always been there to give the right advice and to guide our community in a very proactive way. So we put this together as quick as possible. I know Chris and Marissa have been going through a 1,400-page brief to make sure that they're giving you the right information. And, you know, this is ever evolving, what's going on. So, you know, we understand that some of this information can change, and we will make sure that we change our voice as well. And if need be, hold multiple webinars as we come up. A little bit about our firm. If you don't know about our firm, we were founded in 1986. We serve over 52,000 clients. We do a lot in the community involvement area, from Make-A-Wish to Habitat for Humanity, Center for Food Action. And we have about 3.6 billion under management. And we protect families and business owners in and around the country with over $19 billion in protection. And we paid to our clients last year over $50 million in dividends. So we're very proud of what we've built since 1986, and we're very proud to serve the community. I don't want to take too much more time. I would like to hand it over to Chris and Marissa. So why don't we get started?
Great, thanks, Craig. Good afternoon, everybody. I really appreciate you guys making the time to attend what hopefully will be an informative program for you. So, you know, before we get into it, just want to also, you know, mention that we hope you and your families are staying safe and healthy during these challenging times. So, you know, everyone's kind of in this together. We're here for, you know, for anything you guys could need, any questions you have. A little bit about Cole Schotz. So Cole Schotz, we're an AmLaw 200 law firm. We basically provide legal services throughout the U.S. from offices based in New Jersey, but I'm in the New York office, and we've got Delaware, Maryland, Texas, and Florida offices as well. We you know, our practice is really national in scope and covers a multitude of different practice areas, pretty much, you know, most of the practice areas you need. And our representation covers primarily businesses large and small, as well as individual clients. So, so now getting into just giving you an overview here. Marissa and I are going to be providing you with kind of a high-level view of aspects of the most recently enacted CARES Act, which was enacted on March 27th. And our focus is going to be on loan programs for small businesses primarily, as well as Marissa will walk us through the key employment-related aspects. And then at the end, we'll have some time for to address some common questions that have been coming up. You know, keep in mind as we go through this, obviously, as Craig pointed out, this is very much, you know, we have the act which was enacted. There's been, you know, there's guidance that's forthcoming within the next 30 days. That's gotten forthcoming from the SBA as well as Treasury Secretary, and there's been just guidance kind of going out intermittently. Even most recently, a day or two ago, there's an information sheet on payroll protection program. So, you know, so it's to keep in mind, you know, that there'll be some changes or refinements to the current information, but you know, we're going to give you an overview today, and we'll get into that. So, so now we can wade into, you know, my portion of this, which is really I'm going to focus on the loan programs, primarily the payroll protection program, which is really one of the main cornerstones of the CARES Act, as well as the expansion of the economic injury disaster loan program, you know, to take into account the COVID-19 pandemic. So first, the payroll protection program. So now this is like I said, completely, this is piggybacking on the SBA's Section 7A loan program, except this has a lot of new enhancements, and $349 billion of federal funding that was allocated for this program under the CARES Act. Thus far, it seems like a lot of the small business clients have been focused on kind of getting more information on this and just understanding exactly what this is. So the covered period for these loans is from February 15th, 2020 through June 30. And these are available on very borrower-friendly terms. There's forgiveness provisions, which I'll get into in further detail as I get through. There's no prepayment penalty. The very low fixed interest rate of 50 basis points based on recent guidance. CARES Act itself had it at 4%, but we now know they're basing it based on the information sheet most recently provided at 50 basis points. There's no collateral or personal guarantee requirements, no loan fees, and basically no recourse to owners as long as their certifications are true and accurate. So, what kind of businesses are eligible for loans here? So this would be your traditional small business concern, which is as defined in the SBA rules, which for those of you who are interested are 13 CFR 121.101 at SEC. And so, these are going to be, that's your eligible businesses where under the 7A program. Now, where this has been, this new program has been changed is this open to other businesses and nonprofits with no more than 500 employees, and they'll base that count on full and part-time, so it's inclusive of full and part-time employees. There is a wrinkle here in that if it's applicable, there's a size standard based on the number of employees that's established by the SBA based on your NICE code. And in certain cases, there are, those thresholds, the 500 employee threshold may be higher depending on your code. So that's just something to bear in mind. Another interesting piece of this is that for the restaurant, basically the accommodation and food service industry, they look to the 500 employee requirement based on physical location. So, that's kind of a common theme here. This legislation was favorable to accommodation and food service industry in general. It's also open to sole proprietors, independent contractors, and certain self-employed individuals. So where do you go to get this type of loan? And you'd apply through they're just your existing SBA authorized lender. They're currently approved under the business loan program. There is you can find a list of those available at www.sba.gov. There's a funding programs match site, which you can find there. And then there may be additional private sector lenders that will be authorized under criteria established by the Treasury Secretary. So that's again one of the moving targets, but you can find a list of lenders. So that's probably the first place to go. Now, how do you determine the amount of loan that you're entitled to? And that is where we get into kind of some of the detail here. I'm just going to be a little more general, but it's essentially 2.5 times the average total monthly payroll costs. That's measured for the 1-year period before the date on which the loan's made. Guidance suggests this is going to be really 2019. And it's going to be the lesser of that calculation, or 10 million. So you're capped out at 10 million. And in most cases, you're really going to be basing it on the formula, 2.5 times average total monthly payroll costs. Now, these measurement periods are going to be different for seasonal businesses. They're going to be also different for businesses that were not in existence on February 15th, in which case is a different measurement period. It's January 1 through February 29th. And you'll work with your lender your lender will confirm the amount you're eligible for. Use of proceeds for this type of loan would be payroll costs as defined, which is essentially capped at 100,000 per employee. Also costs related to healthcare benefits, interest on mortgage obligations, rent, utilities, interest on debt obligations that were incurred prior to covered period. So these these arrangements must have been in place before February 15. And that's just so, like, nobody could put something in place after that point. Basically, it's just a requirement of the act. So that's kind of a picture of what the kind of proceeds is going to be, be used for. It's really, as its name suggests, paycheck protection program with a focus on payroll costs. Now we get into forgiveness, which is a little more technical. For these loans are forgivable in part or in full, depending on the facts. The forgiveness amounts are based on the payroll costs and all the costs, aforementioned costs, mortgage interest, rent, utilities that are incurred or paid during the 8-week period beginning on the date the loan was originated. The forgiveness amounts can exceed the principal amount of the loan, obviously, and not more than 25% of the forgiven amount is for non-payroll costs. That's something kind of the more recent guidance suggested. So payroll costs are essentially going to make up a large component of the forgiveness amounts. If you're going to look at payroll costs basically making up like 75% of the forgiveness amount you would take. The forgiveness amount is reduced for employee cuts that are made during the covered period. And when I say covered period, I'm talking about the period from February 15th to June 30. They're also reduced for reduction in wages, employee wages, and that's based on a straight reduction of wages during the covered period in excess of 25% of the employee's wages during essentially the most recent full quarter before the covered period, which is really your quarter ended December 31. And that is also limited to employees making under 100,000. This one we read as an all or nothing. So that is your forgiveness amount is going to be reduced again essentially for employee cuts and reduction in employee pay during this period. There is a forgiveness of that, what we'll call penalty, the forgiveness penalty, if the business rehires or restores pay to what it was before on or by June 30. Okay. There is some nuance there, which I'm happy to get into more details offline on, but that's the kind of the gist of how the forgiveness provisions work. You will have to apply to the lender for the forgiveness amount, and then the lenders are required within 60 days to make a decision on that. And so there's also going to be more guidance on the forgiveness provisions within 30 days of enactment. So that's more to come on that. On payment deferrals, the payment of principal, interest, and fees under the payroll protection program is deferred for 6 months, but interest is going to accrue during that period. And then some of the other key terms that bear mention here are, that what's called the affiliation rules are waived with respect to applicants in the accommodation and food service industry. So those are applicants who have Section 72 in the NAICS code, as well as businesses that have SBA franchise or identifier codes, and businesses that receive SBIC funding. And so why is this important? Because the affiliation rules essentially, they normally would apply, and they limit the amount of business, the applicant, in essence, the types of applicants that can apply for this. So because the accommodation and food service industry applicants have this requirement waived, and also you count by 500 by location, it really opens up this program in a meaningful way to applicants that are in that industry primarily. Another feature here is that what's called the credit elsewhere rules are waived. So what that means is usually the borrower would have to, or the applicant would have to look to the principals that have 20% or more as alternative sources of funding. They basically have to look to the SBA as essentially a lender of last resort. And those rules don't apply. So that also really facilitates the ability to be granted or as an applicant to receive a loan under this program.
Hey, Chris.
Now, yeah.
I just want to jump in for 1 second. I know we're getting a ton of people asking questions on the chat.
Yep.
We're going to do our best. I'm just letting everyone, we're going to do our best to answer a lot of these questions, I think, as the conversation evolves. And at the end, we have already gathered questions from people who, when they registered, so we're going to try to cover those as well. We are going to try to answer as many as possible, but as Chris just said, we'll probably have to do a lot of this offline because there just isn't enough time that's going on. The other thing is that one of the comments was the slide's not moving. This is one slide right now, all the things that Chris is talking about, because we just couldn't put together a 50-page deck this quickly. So it's more of an overview. But Chris, one of the questions that is coming up multiple times now in the chat room is about the $100,000 cap. And can you just elaborate on it? People are asking if I make, if they have employees that make over 100,000, are those employees excluded, or can they still get reimbursement for up to the 100,000?
Okay, that's a great question. I mean, our interpretation is it's up to, in terms of the payroll costs, which is really how you're going to determine the loan amount. You're going to take up to $100,000, so per employee on an annualized basis. Okay, so the other wrinkle there is that for forgiveness, which is the other $100,000 threshold, when you look at the employees that are, the reduction in wages over the covered period, that you're going to exclude employees that make over $100,000. So you're not going to, those employees in the forgiveness piece of it, those employees that make over $100,000 are not going to be part of that equation in terms of measuring how much your wages decrease. In terms of what the loan will cover, your payroll costs are going to cover payroll for employees up to $100,000. So they're going to cap out for employees that make over $100,000. But you'll get credit in terms of the loan amount will include payroll costs up to $100,000. So for employees that make $150,000, you're going to get up to $100,000.
And just quickly.
That's our interpretation. Again, subject to guidance, but so far that's the way the guidance seems to be interpreting it. And
just an add on to that. An add on to that questions coming up is healthcare premiums and benefits. Are those considered as a part of the payroll, or are they carved out? And the other is several questions about, I'm an officer of the company, I'm an owner, and I take distributions as my pay. Is that factored in that way as well? Yeah.
So I mean, the first one, I think I'm sorry, repeat that first question again.
Sure. The first part was about benefits, healthcare.
Yeah, that's covered. I mean, that's included in the loan process, can be used to cover group healthcare benefits, including premiums. So that is a cost. It's separate from the definition of payroll costs, but it's one of the costs that you could apply, that you basically could use the loan proceeds for, along with rent, utilities, and interest on mortgages. Okay, should I move on, and then on the distribution piece, it's a little nuanced. I mean, there's a lot of facts there. If you're a sole proprietor, your comp is capped at 100,000. If you are an independent contractor as employees, it's going to depend on the amounts, the number of employees you have, and kind of those thresholds. Owner. I mean, the short answer is really, it's the general answer is that the loan is really not intended to pay distributions. It's really intended to cover payroll costs and operating expenses. So that's kind of, if you step back and think about it generally, that's really the main intent of this provision. So of this act. So as far as distributions, it's not really it's not my sense that would really cover that. It's really just going to be more to cover, I mean, it would cover comp, and would cover certain things for an independent contractor up to $100,000. But that's really it. It's really going to cover your operating expenses of the business, which I don't think would be distributions. So let me move on to the economic injury disaster loan program, so we can cover that, because I know it's 2:24 now, and we've got Marissa's got to get through her piece, and then we can circle back at the end if we have any other questions or offline. So the economic injury disaster program for COVID-19 was also greatly expanded. And this was basically $10 million $10 billion of additional federal funding was allocated for this program. So what that did was provide for a larger group of eligible entities beyond the typical small business concerns. Really, essentially the same type as the Payroll Protection Act: small businesses no more than 500 employees, private nonprofits, ESOPs with no more than 500 employees. The loan itself, the loan program itself provides loans up to $2 million. Interest rates here are 3.75 for small business and 2.75 for nonprofits. Longer repayment, a 30-year repayment in certain cases. And there are, for the EIDL, the Economic Injury Disaster Loan Program, there are collateral and guarantee requirements, but they're very reasonable. I'm going to get into a little more detail below on that. All states here are automatically deemed disasters due to COVID-19, so that helps with qualification. And the covered period for this loan program was January 31 to December 31. So that's the period within which you can make an application. Use of proceeds. This is going to help basically small businesses, nonprofits meet the financial obligations and operating expenses that they suffer due to COVID-19. So similar to the payroll protection, it's going to be fixed debts, payroll, accounts payable, and other bills that just can't be paid by virtue of the impact of COVID-19, which would include increased costs to deal with kind of supply chain issues. So if you have a manufacturer and you have to go to an alternative, that may be an eligible cost. But again, here, just as before, this program is geared towards covering really your operating expenses rather than replacing lost profits or serving to fund business expansion type of things. With this EIDL program, there is a nice little incentive. There's a $10,000, what they're calling a grant, that would be available within 3 days after the SBA receives the application, subject to verification that the entity is eligible. So that's little. It's not a huge amount, but it's enough to potentially help a business that's looking to apply under this program, and that advance can be used for any allowable purpose, and even if the loan's denied, essentially that grant is not repayable, but you just have to meet the eligibility for the program. Another practical point here is you just want to think before you apply for this is which makes the most sense. Does it make the most sense? I mean, there was so much government funding allocated towards the payroll protection program. I think my personal view, that's really probably the better way to go, but you do have the ability to, if the EIDL application was made after January 31, you have the ability to potentially refinance that into a payroll protection program. But again, you're dealing with limited amounts that are allocated to these programs, so you have to bear that in mind in terms of which application you're going to go under. So another distinction, in terms of other key terms, these loans are not forgivable. The EIDL loans are not forgivable, and the affiliate rule does apply. Full stop. It applies, regardless of what industry. Loans over $25,000 require collateral. Those would include kind of your typical type of collateral for SBA loans, real estate, and they won't decline for lack of collateral, but they'll require you to pledge what's available. There is a waiver of personal guarantees for loans up to $200,000 under the EIDL program. They also waived the credit elsewhere test, which I mentioned, and the requirement that the application be a business for 1 year. I think I talked a little bit about the interplay between EIDL and PPP, which I'm short for the Payroll Protection Program. But essentially, you really are supposed to have the EIDL. If you have an existing EIDL loan and it's for purposes other than COVID-19, that should work. However, you're not supposed to have the two different loans for the same purposes. Subject to refinancing an EIDL loan into a payroll protection loan as long as requirements are met. So that's a little bit about the interplay. And then I know we got to move on. I just touched. I mean, the Express Loan Program is something that that the CARES Act made a change to in terms of maximum loan amounts from $350,000 up to $1 million. And this program has a very accelerated time frame. It's 36 hours. Generally, you have to have a pre-existing relationship with a lender. So there wasn't, other than just expanding the maximum loan amount, there wasn't really much about the Express Loan Program. And lastly, Main Street Lending Program, which is small and medium-sized businesses. This was touched on in the Act, as was the Treasury Secretary's mandate to provide a specific loan facility for small businesses and nonprofits between 500 and 10,000 employees. That's a little bit more of your medium-sized business, but those programs are going to be fleshed out. There's really no detail on those, so it's just a little bit of a preview. But they're going to be fleshed out by rules and regulations within the next 15 to 30 days. And but a lot of businesses are anxiously awaiting that, so hopefully more to come. And that's basically my wrap up. So on my loan piece, subject to any questions, I'd turn it over to Marissa to talk about some of the employee-related and labor side aspects of the Act.
Yeah, Chris, just before you hand it over to Marissa, a lot of questions coming in on the chat feature about could you just go back over? People want to know, can they apply for both loans now?
You wouldn't apply. No, I mean you can't apply. You can't apply for both. You're not, and there's potentially going to be. You're going to have to certify that you need the money, and that you're not getting the money for duplicative purposes, and there's punishment by law. So you really, I mean, I wouldn't. You're not. The short answer is no, right? You apply. You can apply for an EIDL and refinance that into a payroll protection, but you should not apply for both loans at the same time.
Great. I think that was, just everybody, a lot of people asking questions about that.
Yeah, I mean, and again, like a lot of this has to be, this is just, we're looking at the Act. I mean, we're looking at, there's probably a paragraph or two, talking about these points. There's a lot of detail that's going to have to be worked out in the regulations to really, flesh out all these processes and rules. And so kind of everyone's really, waiting for that to get into more detail. But yeah, that's the general sense based on the current information out there.
Right. I think, by the way, I see on the chat people are saying that you can apply for both. I think that's, Chris is not saying you can't apply for both.
You can, but it depends on the use of the proceeds, right? Like if you have an EIDL loan for, for purposes other than what you're applying for under the PPP loan program, then, that's not what I'm saying. I'm saying you can't use the loan for the same purposes.
Right. And I know some of those questions are coming in. Those would probably be, at this point, we kind of take them offline because sometimes different businesses, different needs, different reasons, different expenses. And as Chris said, you might decide to go with the EIDL and then refinance that loan into the payment protection.
Right.
Plans.
Right. But it raises questions over whether you compromise your position, with the PPP program. I mean, there's $349 billion, but if you're the last guy in the queue, I mean, I don't know the answer to whether that prejudices you, but I would think, if you qualify for the PPP program, that may be the better way to position it. But every situation is different, and we're happy to answer specific questions offline.
Yeah, I think, I definitely want to move it over to Marissa, and I know there's a lot of questions coming in about when will we be getting the reimbursements? How do I, let the lender know what's reimbursable or not? Will someone guide me? Again, a lot of these questions, we could be here, I think, for hours upon hours upon hours. So we need to kind of take those things offline. Part of the reason we're doing this is because everybody has lots of questions and there's lots of confusion.
And honestly, Craig, there's everyone's in the same boat. I mean, there may not be answers to some of these questions until the guidance is forthcoming. That's just where we are on some of the points.
Yep, and I think the 1,400-page document that came out a week and a half ago, maybe at this point, there's going to be a lot of interpretation out there, and I know firms like Schotz are doing everything they can to get legal opinion from other resources as well. So why don't we kind of move over to Marissa, if that's our next spot?
Sure.
Yes, sounds good. Hello, everyone. My name is Marissa Mastriani. I'm an employment attorney at Schotz, and it's a pleasure to speak with you all this afternoon. I hope everyone and their families are staying safe and healthy. I'm going to cover three big topics that really are impacting businesses the most in light of the pandemic, and the big ones are reductions in force, employee terminations, wage cuts, and the surrounding legal considerations. And the second one is complying as an employer with your duty to protect your employees under federal law and any confidentiality obligations that you owe to your employees. And lastly, I'll go over the recently passed federal Families First Coronavirus Relief Act, which is that law that provides for paid leave to employees in certain situations. And of course, like we've all been reiterating, this is a high-level general overview. A lot of what's best for your business depends on the facts. It depends on your state and local law as well. So let's jump right in. So the unfortunate situation that a lot of business owners find themselves in is that the pandemic has caused them to make really tough decisions as far as keeping employees on board, whether to ask people to take pay cuts in order to keep the business afloat for the foreseeable future, because the problem is we don't know when this pandemic's going to end and when things are going to go back to normal, right? So some options that employers have is either conducting layoffs, which are terminations, furloughs, which are asking employees to either take a reduction in hours or to take an amount of time off that's unpaid, and then there's pay cuts. So when we're talking about layoffs or employee terminations, we could talk about either permanent or temporary. So permanent is, hey, employee, I'm, due to COVID-19, I can't keep you on, and there's no intention of hiring you back. Versus a temporary is, because of COVID-19, the business, we need to lay you off, but my intention is to rehire you whenever the business starts back up again or when we can support you. And of course, all employment in the US is generally at will. So it's not as though you telling someone that it's temporary that you're promising them employment in the future, so long as you use your words appropriately. But yeah, so those are the two options with employee terminations. So with any termination though, a lot of state law like New York, New Jersey definitely requires this, is you have to provide your employees with written termination letters that contains various information. So again, you'd have to consult with your state law, but that's generally, here's the reason you're being terminated, here's your termination date, here are the date that all of your benefits are ceasing, and here's also some information about any COBRA or healthcare continuation information that you were entitled to by law. And a lot of states also require you to put a little paragraph about how they may be entitled to unemployment, and here's an unemployment form that they can go use with the state to file their claim. So whenever you're conducting a termination of any sort, there should be something in writing. Even if not required by state law, it's just a general good tip for practice there. So the COVID-19 has really brought back the furlough. Usually we didn't really see furloughs that often in the employment realm, but a furlough is you're still technically keeping somebody employed. They're still an employee of the company, but you're asking them either to go from a full-time to a part-time schedule, or asking them to say, to take, hey, 4 weeks off of unpaid leave. And during furlough, an employee is not working for you, that they are home, they're doing whatever they're doing, because otherwise, of course, you would have to compensate your employees for doing that. So a lot of employers are deciding to do the furlough approach instead of the full-on termination. And it really depends on what industry you're in, what are your concerns, what kind of employees are we talking about, whether, which one would be better for you. But there is that option. Something to consider with furloughs, though, is, how does that impact an employee's benefits? Because it depends on, like, for example, employees are going to care about their health plans. So under some health plans, a furloughed, non-active employee is therefore no longer entitled to health care and should be given COBRA information. But sometimes that's not the case. And in fact, Horizon last week said that they were altering temporarily their benefit plans to allow employees who are on furlough to stay on as active employees pursuant to the plan. And there's also, when we're talking about terminations, furloughs, pay cuts too, every decision like that has its risk, right? So the typical employment claims still apply here. So an employee could still sue you for discrimination because they feel like you're terminating them for some illegitimate reason and not because of COVID-19. When we're talking, especially terminations, we also have to consult the state laws because a lot of states have been passing COVID-19 specific legislation to kind of keep employees employed. So in circumstances where an employee is on job protected leave pursuant to state law or the federal law, which we'll talk about later, the answer might be you might not be able to terminate them right away because they're on job protected leave. And there may be some exceptions depending on the law. Also, for example, in New Jersey, which is unprecedented law of its kind, passed where if an employee has or is likely to have an infectious disease and takes time off because of that, that's job protected leave. And there is no exception under the law as written that you could fire that person while they're on leave or because they took leave. So that really raises the stakes here because we're talking about a pandemic that's unfortunately impacting hundreds of thousands of people in the US and will continue to do so. So we have to be careful when making these selections where, ask yourself, is this person out on leave because they told me about, they're scared about having COVID-19 and they have symptoms. So there's a lot that kind of goes into it. And you definitely, my advice is always seek counsel if you're unsure about anything. We also have to be careful with warrant triggers. So under federal law, and states have it too, if you lay off a certain amount of people at one time, you have to provide them with a 60-day notice before you could terminate them, subject to certain exceptions. So generally the Federal WARN Act applies to employers over 100 employees. So if you're under that threshold, you still should look at your state law to see if you fall within something like that. But if you're making mass layoffs at once, that's definitely something to consider. And of course, with layoffs, with furloughs, potentially with pay cuts, employees may be are entitled to unemployment benefits. And under the CARES Act, which Chris was talking about in depth, the CARES Act expands unemployment benefits for a lot of individuals in this country. And what those provisions really do is fill the gap between the average American paycheck and what states actually give you under their state law, which for a lot of states is really not much at all, especially not to support a family. So under the CARES Act, you get an extra $600 per week until July 31st if you qualify for unemployment. And that's on top of whatever you would be entitled to under your state law. And also, which is fantastic for sole proprietors, independent contractors, the CARES Act expands unemployment benefits to people who, like them, who otherwise wouldn't be entitled to unemployment. And in fact, adds an extra 13 weeks on top of what you may get under typical state law. So people who are out of work, specifically for COVID-19 reasons, are now entitled to up to 39 weeks of unemployment benefits at varying levels of pay, depending on your state law and depending on, you know, the reasoning behind your application for unemployment. And then we'll go on next to the OSHA standards for Craig, if you could hit the next slide. Yeah, thank you. So under OSHA law, federal law, every employer has a general duty to protect your employees against known hazards in the workplace. And COVID-19 is 100% a known hazard at this point, which means that employers have to take various measures to protect their employees from the spread of it. And if failure to do so may violate that general duty under OSHA law to protect your employees, which would subject you to OSHA investigation, liability. Trust me, you do not want OSHA showing up to your workplace and telling you that, hey, you got all these people sick because you didn't enact the appropriate measures. That would be a nightmare situation. And the issue though is that it's not like there's one set standard, and it really depends on how many employees you have, what are the working conditions, what industry are you in, as to, you know, what would be a reasonable thing for you to do. Generally speaking, it's informing your employees, hey, you know, follow CDC guidelines. Your health is our utmost important to us. If you have any concerns about, you know, that you feel sick or that your family member's sick and has COVID-19 symptoms, please come to us. We don't want you here if that is the case. And especially in times like this, workplace communicable illness policies are really important. And essentially those are policies where you enact company-wide, and it allows you as an employer to send home an employee that's coughing up a lung all over everyone or looks really sick. It doesn't even necessarily have to be COVID-19 related, but of course that's what we're most worried about here. But it could be cold, flu symptoms. I mean, if you see someone who's ill, having a policy like this, if it's drafted appropriately, can provide you with some cover to say, hey, no, you got to go home. And that's a great way to protect your employees. And of course, you know, making sure that the workplace is sanitized. And a lot of employers have decided, you know, because they have the capability to just go completely remote and have all their employees working remotely. And in some circumstances, that's required by the state law, all the executive orders coming down, you know, in the metro area here. So, you know, there's a lot that goes into that. But, you know, I think all employers are going to be faced with this. And the question is, what happens when I know that an employee is tested positive for COVID-19? Or what happens when an employee has a family member in their household that is tested positive for COVID-19? And again, it's all very fact specific, but generally speaking, the advice is that obviously you tell that employee that they have to stay home until they get better, and you can require that employee to provide you with a return to duty note from their doctor saying that they're all clear before they come back. And you know, the other trigger here is what's your obligation to tell the rest of your employees about this person with a positive test result? And the general guidance here is what I tell clients all the time is you do have an obligation to let people know that someone in the facility has tested positive for COVID-19, but pursuant to the Americans with Disabilities Act, you cannot disclose that employee's name to the other employees. But you can, you know, let people know, oh, they worked on the 4th floor or they were, they were only in the last day on the job was X day. But you also need to really talk with that employee with the test result and say, okay, who have you had close contact with? That's the CDC guideline, close contact within 6 feet over the last 2-week period. And you gather a list of those individuals, and you should go ahead and individually call each and every person on that list and let them know, hey, you still can't disclose the employee's name, but we've been informed by the employee who's sick that they were in close contact with you, and please, talk to your doctor about it, follow CDC healthcare guidelines, and let us know if you start, feeling not so great and you need time off. At the end of the day, having a rigid sick time policy would be very bad in this situation. You do want people to stay home that feel Of course, there are always going to be those people that try to take advantage, but you just have to weigh that out. It's like a risk analysis. What's more important as a business? And of course, these businesses that are in the essential industries like food or defense or infrastructure, I'm hearing it from my clients that they're having trouble getting people to come to work because people are scared. And as a human, you can understand that, but as a business, you still have to operate. So what's very interesting here is what happens when you have an employee who is just scared and doesn't want to come to work. They don't have symptoms. No one in their family has symptoms. And it's a really tricky analysis, and it depends on, does the employee have an underlying condition? Are they in a more senior age group that are more susceptible to this? So employers are facing these questions every day, and it's really fact specific again, but definitely, more to come on that. And hopefully the government is handing down diet guidance. Like the EEOC has issued new pandemic guidance for employers last week. The Department of Labor is actively issuing guidance all the time. So definitely keeping abreast of any updates. And I want to move to the last topic here.
Hey, Marissa, before we move to the last topic, there's a lot of activity going on in the chat about if you furlough somebody and then it gets a little bit more granular, and you reduce their hours and or pay, can they file for partial unemployment or unemployment? And if you just furlough them with 0 hours, can they file for unemployment? And how, as the business owner, does that look for the PPP filing and all those types of things?
Right. So yes, the answer is yes. An employee may be entitled to unemployment if they're furloughed partially, so they're working like half-time, or they're off for 4 weeks, just as if they were terminated. Now it depends on the state law, so it's really hard definitely to draw any bright lines. But an employee could be entitled to partial or full depending on the circumstances of furlough and what they were making at the time and for how long, etc. Of course, I know Chris addressed the forgiveness portion of this. So any reduction in employment there could impact the amount of forgivability of the loan. So there's a lot kind of going into that question. Okay, so on next to the federal law, the Families First Coronavirus Response Act. So this is a big deal. It's not every day that the federal government issues paid leave law. So this went into effect April 1st. It applies to employers of 500 employees or less, and it essentially provides for a bunch of different types of leave for various situations. But before I get into the different types of leave, I just want to note here for anyone on the call, there is a small business exception under this law where you wouldn't have to comply with all of the obligations. So it's for employers with under 50 employees, and you can apply for this exception if complying with the law would otherwise jeopardize the viability of your business as a going concern. Unfortunately, that is the only guidance that we have at the moment as to what that means. And it sounds like a very high standard to me. But the DOL is supposed to issue regulations sometime this month about, what exactly is the criteria to meet that test. So if you do feel as though you are a business and you would potentially fall under that, maybe start thinking about what kind of evidence would I be able to submit to the government to try to qualify for this exception. The problem is unfortunately, the law is in effect, and who knows when the DOL is actually going to issue regulations. So you have to make a decision as a business owner whether you just want to try to comply with the law because you're worried that you're not going to be qualified for the exception, or just hold off and apply for the exception and see what happens. And all the leave I'm going to talk about here, it's all temporary. So any leave is currently, in its current form, only going to apply through December 31st of 2020. So there's two big types of leave. The first type of leave is emergency paid sick leave, which is, as you see in the slide here, an employee is entitled to up to 80 hours to take emergency paid sick leave for 6 reasons. And the reasons are that they're subject to a quarantine order, they're advised by a healthcare provider to self-quarantine, they have symptoms of COVID-19 and are seeking treatment, they're caring for someone with COVID-19 or with symptoms of COVID-19, they have to take care of their child whose daycare or school is closed, which is a lot of Americans are going to qualify for this. And also other similar conditions that may arise, which hasn't been defined by the DOL yet. So essentially, this leave is a full-timer, a typical 40-hour-a-week person is going to get up to 80 hours of paid leave. And the amount of pay that they get on a daily basis depends on the reason for taking the leave. So if they're taking the leave for themselves, essentially they get their full pay up to a maximum of $511 per day. But if they're taking the leave to care for a child or to care for someone else, the maximum payment per day is 2/3 of their normal pay, up to a maximum of $200 per day. And all the payments that an employer is going to pay out under this law is eligible for tax credits later on, so long as the employer, which means that as an employer, you should be keeping track of who's taking this leave, why are they doing it, so when you do go to file for those tax credits, you're going to have the requisite documentation. So the other type of leave that the law provides for is expanded FMLA benefits. And the FMLA typically only applies to employers with over 50, but this particular part of FMLA now applies to any employer under 500. And that's where it's 12 weeks job protected leave for an employee that has to take a leave of absence to take care of their child because their child's school is closed or their daycare is closed. And again, which is a lot of people in this country. So there, the FMLA, that's 12 weeks of paid leave, again, paid by the employer, and you get up to 2/3 of your regular pay, up to that $200 a day mark. The FMLA, the expanded FMLA is just for that one reason that you could take it. And the 12 weeks includes the first 80 hours, the 2 weeks too. So it's a total of 12 weeks completely. And the maximum amount an employee is entitled to be paid is $12,000 under the law. And a lot of states like New York, New Jersey have passed their own similar types of laws to provide for paid leave or job protected leave in certain scenarios. Or a lot of states have decided to expand their paid family leave benefits, expand the reason why you'd be eligible to apply for something like that, or for disability benefits, all related to COVID-19. So it's really, at the end of the day, keeping track of all the new developments that are, as a daily/weekly occurrence to know what your obligations are as an employer. But yeah, that's the general overview. If anyone has any questions, open it back up.
Some questions coming in about if I'm an employer, am I going to be liable if I'm not taking advantage of some of these programs and or guiding my employees through unemployment or programs that are available to them if I furlough or terminate employees?
Right. So if you're an employer and this federal law applies to you, yes, you will be held liable if you do not comply with it, unless you qualify for that small business exception. And in fact, the DOL issued a notice that you have to post in the workplace or send to all of your employees via email. It's an employee rights kind of poster that you see a lot of those kinds of things. So sending that out to your employees is required. So yeah, I definitely wouldn't suggest trying to shy away from complying with these laws. And I talked about the termination letter requirements and stuff like that earlier. A lot of states do, by law, require you as an employer to let your employees know that they may be entitled to unemployment insurance, and there's potential notices that you have to give out depending on the state you're in. Of course, as an employer, though, you cannot promise someone that they will get it, how much they'll get, because at the end of the day, that's a state's decision. So I generally tell our clients to shy away from making any promises, but yes, you do have a general duty to notify employees of their rights under these kinds of laws.
Okay, great. I know this is for Chris and Marissa. A lot of people asking, where do I apply for these programs? How do I go about it? What's my next step? When would I expect to get money reimbursed to me? Those types of questions are flooding.
So you want me to, I can address the loan piece of it. Right now it's, if you go to an SBA approved lender, and SBA.gov, there's a specific matching sub-site within that. You can find an approved lender near you. You'd apply. There's actually a Paycheck Protection Program application online. From what I understand, they're not, for small businesses, April 3rd is when they're actually going to start taking applications, at least the approved lenders, for small business, and for independent contractors, it's April 10th. Not sure why they have a different time frame there, but that's kind of the state of play now. And so that's how you'd go about it. I mean, there may be additional lenders that are added, but again, that's going to be determined. That's to be determined. That's not set yet.
Right. Marissa, I get questions are coming in. They have an employee, they are not feeling well and or expect that they're thinking they might have COVID-19, but there have been not enough testing facilities for them to go and get a test.
Right.
What does the employer have to do because they have an employee who has not tested positive, is not feeling well, and the reason why they haven't tested positive is because they can't get a test? What is their liability? What are they supposed to communicate to their employees?
Right. So in that circumstance, the first thing is you tell that employee to stay home until further notice, until when they start feeling better. And there's no automatic trigger to tell the rest of your employees, hey, we have someone who is really sick, and we're not sure if they have COVID-19. They might. So some employers might decide to choose to do that, to be err on the side of caution. But it's not as though it's written in stone. You definitely have to. And so it really depends on, at the end of the day, again, just like weighing out the risks and what's most important, whether you want to be more open with employees or less, because, of course, the more you tell employees, well, this person's sick, that person's sick, that's going to impact your business operations, because less people are going to want to come to work. So there's a lot of considerations that go into it here. And of course, allowing someone who's sick to use any time off pursuant to the federal law we talked about. There's state laws, again, that I was referring to, any time off under company policy. So just giving those employees that, what they're entitled to. And failure to do so, and in states, a lot of states, could be wage and hour violations. Of course, violation under the same federal law, and wage and hour violations are literally the worst for employers, because in a lot of states that means potential jail time for officers and directors. So you want to avoid that. Not that it's normal for people to be thrown in jail because they didn't pay their employee for one day, but it's there. It's written in the law. It's a possibility. So just being weary of what that employee is entitled to for whatever they're experiencing.
Right. Some more questions about I have employees, I want to make sure I have a safe work environment. Can I ask them to have their temperature taken before they walk in the door?
Right. So under normal circumstances, I would say no. But in light of COVID-19, yeah, the answer is yes, you can do it so long as it's done in an appropriate, compliant manner. You're doing it to everyone that's coming in. You're using that information that you gain. Say someone does have a fever, that's protected health information. So you have to keep that confidential and also store that information in a location separate and apart from an employee's personnel file. So there's a lot of record keeping issues that are going to come up there too. But yes, the EEOC has said that employers can do that now to protect their employees. It's not an outright requirement, but a lot of employers are deciding to do that.
Okay. Also, this could be a Chris or Marissa or even myself, and we might not even have the answer yet. People are calling their banks or a bank and saying, I want to apply. And some banks or many banks are saying you can't apply with us unless you are a banking customer of us. Do you guys have a feeling on that?
That's interesting. I would think that's like a bank. I don't know why they would do it. I mean, I think that's a bank by bank decision. If these lenders, I mean, the only thing I can think of is an express loan program, but that's really a different type of program than this Payroll Protection Act. So, I'm not aware of any restriction there for the payroll protection program if you're an SBA approved lender. So I can only guess that that's just a bank decision. I'm not sure why why they're getting that answer. The other piece again is based on the guidance. April 3rd is when you're supposed to start taking applications, or lenders are supposed to start taking applications, but that's a different piece of the equation. So.
Yeah, I know many of you are saying that banks are saying to you that they're inundated with applications. That's going to happen. And as Chris just mentioned, they're not really supposed to be taking applications until tomorrow. So I think the next 2 weeks will be probably, there will be some new systems and processes and maybe more guidance come out for the banks themselves and how they're supposed to process and online portals. So I don't think it's going to be an easy road for the next 2 weeks to make sure that you're filed properly, not because you can't provide the information, but more importantly, the banks are overwhelmed with people trying to fill out this paperwork. So I would say make sure that you do your research with the institution that you want to go with and make sure you really understand what their process is to go through the SBA program. Chris, Marissa, anything else you'd like to add? Because I know we're coming up, we're past the hour a bit. Okay.
No, I think I'm good. I mean, I think it's just at this point, if they don't have anybody has any further questions, I mean, we can always answer some questions. We're available to answer any other questions offline. And basically, I would thank everyone for attending and sharing the time, and hopefully this was informative. And be sure to check. There's a link to our COVID-19 Resource Center at the back of the material. So hopefully, there's also tons of materials that we've been providing over the last couple of days that may be helpful.
Right. So I would, Marissa, anything before we wrap up?
Yeah, no, just thank you all, and yeah, hopefully this was helpful, like Chris said, and yeah, please feel free to reach out, and we'll happily take your questions.
Yeah, I think that I echo Chris and Marissa's comments. This was put together in the last 36 hours with evolving information. So I know that the chat board was starting to light up just as we were ending as well with more questions. We are here to answer them as much as we can. The prior slide, which I'll go back to right now, has our contact information. Please reach out where we can guide you. But I do think that the information is going to still be changing, especially with the 30-day comment period coming up for this this bill and this act. So make sure that you're utilizing the resources that are in front of you, either a firm like ours, a firm like Schotz, and in coordination with each other, and really working with your bank and your CPA as well. Again, I know there are tons of questions piling in right now. I can see the chat happening. We don't have the time to answer those right now, but we can, if you want to contact us directly, we will do that. But for myself and the whole entire CFS MW family, and I'm going to speak for Cold Schotz and their family, we hope everybody stays well, stays healthy, and we look forward to seeing you soon.